Hi there, Serial Trader here. I got a request to have a look at XLE, and I'm also going to look at oil because it's important to get a handle on what oil is doing if you're going to be looking at oil stocks. In this case, XLE is a oil stock ETF. But this is a monthly chart. So from the June 2014 high, I think you got a nice three-wave decline, ABC down. This was the equality relationship between A and C. You can see a stab there, kind of intra-bar, but largely providing support. And in this case, I think the subdivisions of the C wave, they count best as a truncated fifth. So even though the actual, ultimate low was 2288, I think the C wave actually ended here at 2698 in a truncated fifth. And normally I don't like to lean on truncations because they're pretty rare, but if we go in here, let's say onto the daily chart, even on this daily chart, you can get a five-wave non-overlapping sequence leading up to our low here that we just put in on October 29th. So let me drop that degree down by one, right? So that works for me. 5 waves down to complete the pattern. And now let's have a look here. Yeah, 5 down for C. Now if we go in on the date, well, maybe I'll go down to a 4-hour chart. Even an hourly, actually. Okay, yeah. So hourly chart. So off the bottom, potentially a major bottom there, right? You can definitely see an impulsive sequence kind of unfolding here. So a little wave 1, maybe ABC. We'll call that a little expanded flat wave 2 without putting too much work into it. Looks like a third wave in progress. Then, of course, you get the 4 and the 5. And then once you get that 5-wave move up, that would, call for a 3-wave corrective pullback. And then looking for another impulsive sequence after that. So basically the start of a new trend kicking off with an impulse wave here, even just on the hourly chart here off that bottom, right? So as far as, shorter term targets here, third wave targets, what do we got going on? We can put on the 1618. I think we've already surpassed that. Actually, we're just right about the 1618 right now. Okay. So maybe our wave 3 is coming to an end soon, although there's certainly no evidence of that. Yeah, we're at the 1618, got a little bit of RSI bearish divergence there in the hourly. Not that it means a whole lot in the hourly necessarily, but we could easily keep extending here. You can go to the 2618 or beyond as far as wave 3 targets. But the important part is it looks like it's very impulsive what's unfolding here. Certainly any corrective looking pullbacks, even short term, are probably buyable. So that's kind of my take on that. But more importantly than the short term action, I think anyways, more importantly, let me just delete some of this stuff here. If we get back to that monthly chart, this overall 3-wave decline, being that we're, debating whether it's complete here. If it really is complete, which I think there's a pretty good chance that it is based on everything I'm seeing here. Eventually, that means you're going to take out the high of the pattern's origin. So that was up here, in 2014 at over $100, and here we are at still in the 30s. So just a simple buy and hold. It's been a long time since you can just buy and hold oil or energy investments and have any confidence in their performance. But I think now you can actually make the case that that would be a good idea. So this is looking pretty good here, both long term and, again, even short term on the hourly chart or daily chart, looking good there. Okay, so that's XLE, and obviously targets are eventually long term looking at above that 2014 high, but I won't get there right away. That'll take weeks or months, possibly years. This is a multi-year pattern. Now, if we go over to the crude oil chart, I've never been that crazy about oil stocks if I thought that oil hadn't bottomed yet. Well, I do think oil has actually bottomed, and I believe it hit negative $40 earlier this year. Negative 40, crazy, right? Now, from that negative 40, we did an impulsive move up, and I'm not going to show the whole thing. But for wave one, that made a peak there in August at 43.78 here on WTI. Now, we have a very textbook looking three-wave decline into the November low, and a nice ABC down. AC equality largely hit there. You see there's a slight stab through, but it didn't hold, so that's a nice relationship. AC equality. Obviously, the bottom of the channel bounced nicely off of that, and now we're actually going up through the upper end of this channel, and we've broken above the B wave high. So that's quite promising to suggest that potentially we're in the midst of this third wave to the upside. So as far as oil's upward targets, I mean, I don't want to look too long term, but I like to base targets off of the corrective pattern that we, appear to have just completed. So if we just do a little reverse fib projection to the upside, and let me just put on some of those common numbers, the 1.382 and 2 reverse fib projections. I mean, that gets you up to almost 50, maybe even into the mid 50s, depending on the targets achieved. And you could certainly go beyond that, but just as far as potential trading objectives, those look like pretty decent targets. And here we are actually already starting to break above 42, or just around 42. So oil's looking quite bullish. XLE's looking quite bullish. Short term and long term potentially. Yeah, so that's really my take on that. All right, Serial Trader signing off.